Ladies and gentlemen, Wall Street has gone through a period of turbulence over the last 1 to 2 weeks, and all the analysts in unison are now predicting that a AI crash will come. So everybody is now wondering, should we quickly sell first, then buy back later? And today I want to address this concern because if indeed the AI crash is coming, this is the most logical strategy to do. But watch until the end as I give you a twist to this strategy. So, surprisingly, very few people are saying that a crash won't come. And right now, if I look through almost all the predictions, almost everyone is predicting an AI crash is coming. So how? So how? So how? Everybody's asking. So I'm going to walk through with you some of this thought process. So given that I was looking through all the analysis, I was not surprised to see that everybody is thinking that the AI crash is not just coming, but it's coming fast and rapidly. But I just want to warn everybody that surviving a crash is not so easy. Everybody is just love to follow Mr. Lu. I'm going to buy in a crash and things like that. I think before we even reach there, how do we even survive a crash? So I think this is where I first like to give a warning. Trying to preempt a crash might be the biggest mistake you might ever make. First and foremost, the question right now on top of everybody's mind is, has the AI boom now reached a bubble state? Well, there is an enormous wealth right now being built, especially in the AI sector from Taiwan, Korea, Wall Street, and even China. Everybody is now speculating in a big way in the AI space, and very clearly it's bubblish right now. So almost everybody agrees right now in Wall Street that AI trade has become very speculative. And right now, the Korean AI stocks, in particular, just two counters, which is Samsung Electronics and more importantly, SK Hynix, both of them has grown to some phenomenal level, and everybody is jumping into it. Taiwan as well, especially TSMC, and margin financing, leverage, borrowing money to invest has gotten out of control. There's a lot of IPO mania starting from SpaceX that's happening. People are predicting that say SpaceX, which IPO at $100, will go to $500 very quickly. And of course, some of these things are driving everybody into a frenzy. And right now, everybody is also calling this AI boom might be the biggest bubble since the dot-com days. So let me give you a few articles that just came out this weekend talking about this. So this is first article, AI boom may be on its last legs amid stock volatility and dash for cash, but will it go out in a blaze of glory with blowout phase before bubble pops? So everybody is now questioning, well, this AI bubble, how is it going to fizzle off? Is it going to be one big explosion or a gradual fizzle? So we are also talking about we are in a bubble. Stock market analysts are now calling and warning of a historical AI bust risk. So this is now consensus uh, in a in almost across all the news media. So even the Chinese hedge funds are warning that a AI super bubble is ready to burst. So two of Chinese best-known hedge fund managers are warning that the AI boom in global stock market has become an unsustainable bubble. So everybody is now talking about this, and even the Chinese side who are having a lot of restriction to buy into US are also talking about it. So my favorite investor predictor of the market is Fundstrat, Tom Lee. He's one of the best oracle of the stock market in our current times. He's warning that an abrupt bear market later this year will come. So I've warned many people again and again, and this warning is now echoed throughout the whole stock market in various voices and various degree and in different angles. So right now, we now have expert consensus that they are having one voice saying that a bubble is here and it's going to burst. Why did they all say the bubble is coming? Well, that's largely because there's excessive valuation right now, and people are speculating it to push the valuations higher because it is a lot of people jumping in a late trade, and there is unexpected earnings expectations right now, a lot of borrowing of money, massive leverage, margin trade, and there's also IPO mania that's going on. So this is very similar to many types of bubbles, especially the bubble of bubble of 1990, end 1990s all the way to 2001. In form and shape might be different, but the speculative behavior is becoming similar. So South Korea might be the first place that get burned, and South Korea is what I call the canary in the coal mine. These are birds they use to detect and see whether there are poisonous gas and things like that. So 14 million retail investors in Korea right now have piled into the AI semiconductor stocks. The Kospi, which is a Korean stock market index, has nearly doubled. And right now they're going through fierce turbulence because they are experiencing many 8%, 10% trade speculative behaviors, and even we have got circuit breakers being called in. So it's actually quite dangerous. So Tom Lee right now outright say, be careful, guys. He does expect some kind of turbulence, the testing of the new Federal Reserve chairman, plus there could be more other disruption from the Straits of Hormuz, which we are all betting. Yesterday we did a live stream. Half of us bet that the Straits of Hormuz will be closed again. So if you have just that news, is fine. But if you have that news plus AI bubble potentially being burst plus many other things, then all this collectively together may come at a bad way. Now, this is where, oh, Mr. Lu, if that's going to happen, I better sell now and then I'll buy back later. So a lot of people think that they can time the crash by selling first and buy back later. Well, it's not so easy. And let me just tell you what I always see happens. A lot of people sell too early and then later they try to buy back when it goes even higher, or they buy back too late, meaning the stock market crash and they're still, chattering and having jitters, and suddenly the stock market went up and they miss it totally, or eventually they stay out completely. So I just think that the concept of sell first and buy back later is a trade that is very difficult to execute. So the idea of selling high, buy back cheap is really harder than it sounds because predicting the market is very difficult. So nobody knows when it will come. What if a lightning crash comes? That means you sell right now, it did crash, but it lightningly recovered. That means it crashed by 20%, in 1, 2 days it recover. Can it happen? Well, it has happened in recent months and years. So I think it's something that we need to take note of. It is very possible. So I think it is very difficult to time the market, and given that the human emotions are very difficult to control in face of some of these challenges, plus the fact that we are in the wrong time zone. When the market is trading, most of us are sleeping. So I've done this market crash buying many times, and I think I'm qualified to share with you the experience. 2008 global financial crisis, I went in pretty big. And then 2011 Europe debt crisis, I also went in very big. 2015, 2018, I also went in very big. But 2018 is a very long crash with a small swing. Okay, so it hovers around 10 to 15%, and people are wondering when the severe crash will come. 2020 was a sharp lightning crash, V-shaped recovery. A lot of people missed it. I went in big as well. 2022, a lot of people know that there's a crash. They thought that the crash will last forever, and everybody's just wondering whether how to time it because they just experienced a 2020 crash. So I also went in big on this one. Now, 2024 was a very lightning crash. In one day, it recovered 10%. So even I only could capture a bit of it. So in 2025, in 2 hours, it went down 10% and rebound. I fire a shot at it. Thank God I actually caught quite a bit of it. But the crashes are very unusual. So I will cover in my live stream the nature and different types of crashes. But today, I just want to say that buying into crashes is very difficult because they come in different shape and forms. So each of them all look terrible and terrifying, and not everybody can react by selling first and buy back later. Now, my investment rule very simple: buy globally diversified index funds on the cheap and hold them forever. It's a very simple strategy. I emphasize hold them forever because this is where I just want to say once I buy them on the cheap, even if later it gone up and come down, I don't sell them. Okay, I don't sell them. So I think holding a globally diversified portfolio, when I bought them on the cheap, that means on a crash, I don't think I have any fear when market were to crash again. So this is where I think it's a very sound strategy. Well, I've seen and educated a lot of investors. I just say that those people will win will be largely those not because they can predict, but they can survive longer. They hold very diversified portfolio, hold them for a long time, plus the fact that they have a powerful financial safety net that stabilizes their emotions. So it's all about this word preparation, preparation, preparation. That's important. Mr. Lu, so what should we do? I got a lot of stocks right now. So review your portfolio. Is your stocks built on the house of cards or house of bricks? So if your stocks right now are bought on leverage, highly speculative positions, highly concentrated, maybe single geographical location, then you can ask yourself, are you having a house of cards? Or are you having a house of bricks? That means you're very diversified. You got multiple class of asset, strong financial safety net. You don't use leverage, and you bought them on the cheap, right? So you got to ask yourself, which one are you? So if your house is on the cards, then you got to ask yourself, what should you do given that you know the vulnerability and how fragile your portfolio is. Now, when exactly the crash will come, I don't know. I don't need to predict. I just need to react. I'm ready if a crash were to come 1 week. I'm also ready if the crash will come 1 month or 5 months. But when it comes, I'm ready. The question really is, will you be ready? So we don't really know, and it's very difficult to predict when the crash will come. But the question really is, have you done all the preparation work to get ready? So my parting message to you is fortunes are made by surviving market crashes and buying into them. That means you crash buy, but not trying to predict them and sell before the crash come and then buy back later. Those kind of trades are very difficult to execute. So question is your investments made from house of cards or made on a foundation of bricks? So the choice is yours, and see whether will you panic or you will get ready for this crash to come. Again, we don't know when it will come, but the whole stock market right now, largely I can say have a consensus is going to come. All right. So with this, let's see each other in a live stream, and I'll see